The two most frequently asked questions during the live streams or in the comment section is how high is AMC going to go? What is a realistic price target to expect for the Moass? Because you're hearing $500 over here, you're hearing $1 million over here. That's a very wide range. So we're going to clear that up here in this video, as well as when the Moass is actually going to happen, because meets the eye, it doesn't look like it's going to happen anytime soon, but we're actually getting very close. So let's dive into this video. Hit that like button for me and consider subscribing to the channel as well. If you guys want to get totally free stock with Moomoo, Public, and Webull, check those links out. Link down below in the description. Those are the brokerages that I personally use because Public does not route your order flows, and Webull and Moomoo are just great for charts, short interest, their own separate things. So diving into this video, let's first start off when the Moass is going to happen. Obviously, nobody exactly knows, but if you dive into this a little bit more, liquidity is being restricted, and that's something that I have talked about for at least the past 2 months now, is we need liquidity to be restricted. And check this out, more than 1/3 of NASDAQ stocks have slumped 50%. You may say, hey, this is normal or something. No, it's not normal. The NASDAQ is only down 9% from its highs, and 36% of stocks in the index have plunged at least 50% from their 52-week highs. And implications for the market aren't pretty, possibly a bear market. Take a look at this. Historically, when the NASDAQ stands within 10% of its all-time peak, only 12.5% of its stocks have tumbled that much on average, have tumbled 50%, only 12.5%. And we're at 36% right now. So liquidity is being restricted. A lot of stocks are down. So what's keeping the markets up? Where is all of the money? Well, look no further than the stocks that I have been calling out. The top 5 stocks account for 36% of the NASDAQ weighting. The top 10 stocks accounts for 56% of the NASDAQ weighting. So when you look at it in that sense, the top 5 stocks are Apple, Microsoft, Amazon, Facebook, and Tesla. They have all not been doing too bad. They're not down crazy amounts from their all-time highs. But really, Apple is almost 12% of the weighting of the NASDAQ. And what has Apple done? What has Apple done? Pretty straightforward. Apple is down 3.47% on the month. In the past 3 months, though, really this whole time frame, the markets have been selling off for a majority of us. Like if you're in AMC, if you're in your small caps, or even large cap tech stocks, it's been selling off for a couple months now. Over the past 3 months, Apple is only down 0.25%, 0.25%. So you can see the grand scope of things, Apple is still up significantly, even over the past 6 months. So a lot of the money is literally just flowing into Apple, as well as some of the other stocks. But I think a vast majority is going straight into Apple. And fun fact, it was actually founded on my birthday, April 1st. Kind of interesting. But what does that mean? Think about this. I'm going to give you guys this analogy. And this is the best analogy I could ever give you. Imagine a contractor building a house or a building. Does not matter. But imagine they build that building on sand. Yeah, it might last a while. It might look fine. But every time it rains, the foundation gets eroded a little bit more. Until eventually it comes collapsing down. Because it didn't have a solid foundation. It was propped up on weak stilts. It was propped up on nothing, really. But a house that's built out of concrete with a solid foundation is a lot harder to collapse. So think about that analogy. Hopefully that made perfect sense to you. But if it didn't, let's think about that. The lack of a solid foundation, where we are currently at right now, with this sand foundation and the weak stilts, is because the markets would be down 20 to 30% right now if these big stocks go. If your top 5 stocks go down 10 to 20, 30%, you're in a full-on bear market recession. But what is the key to all of this? What is going to finally make this stock market foundation collapse and see Apple, Facebook, Amazon, Microsoft, and Tesla start to come down? Simply put, and it's pretty straightforward, forward, baby, it's going to be earnings and guidance throughout the rest of this year. If Apple comes out, misses earnings, and gives bad guidance or weak guidance, expect to see the markets drop dramatically. We could possibly go into the fastest bear market that we have ever seen, besides March of 2020. I don't think it's going to get faster than that. But something similar could start to happen. Because, believe it or not, inflation's bad. The Fed tightening policy, raising rates, that's bad. But if earnings are good, that does not mean there has to be a sell-off. If earnings start to go down, that's where you get the sell-off, and stimulus is gone. So companies are used to 2020 and 2021 revenue numbers when there was a lot of disposable money. If 2022 is not like that, then you can expect to see the Moass, baby. You can expect to see that liquidity being restricted, and it's no wonder why the hedge funds have been pinning the stock precisely where they want it to be over the past 3 months. Instead of having these ranges up and down, really letting the market figure out what it wants to do, you've seen the stock be pinned under, $23 per share was a big one, and that's currently where we are at right now. But wherever the hedge funds want it to go, if they want it to go up, they make it go up. If they want it to go down, if they want to keep it under like $23, which this is just comical, that's exactly what they do. Now they want to keep it above $20 per share. So, when is Apple's earnings? Just to make this simple, when is Apple's earnings? Apple's earnings are scheduled for January 27th. Expecting revenue of $117.78 billion. If they miss on that and give bad guidance, expect to get very close to the Moass. If not, start to see the first stages of the Moass. So that's what I have to offer you guys as far as when the markets are going to come down, when liquidity will be restricted, and when the Moass will actually happen. And I hope that resonates with you guys and you understand by now that if these large cap stocks have all the liquidity, it's very hard to see a lack of liquidity unless these stocks go down. So hopefully that made some sense. As far as how high AMC can go, theoretically, if we squeezed in February, mid-February, Apple's earnings are terrible, we squeezed in mid-February, then how high can we go? There's a lot of people with different opinions on this, and that's all fine, and that's great. Some opinions are 500 to 800, some are 1 million. I'm here to tell you guys, 1 million per share is not going to happen. You quite honestly, you might want that to happen, but expect to take care of your family for the rest of their life. Like everybody you know would be screwed. The whole financial system would collapse. So I don't think legally people would let it get that high. Like your regulators, I don't think they possibly could, because it would crush the whole system. Like kiss the Fed, kiss everybody goodbye. They're all out of jobs. We would have took all the money. As far as what is reasonable, I think this really comes down to everybody, but I think it's also very clear to see. What do you think is the psychology of the average price target? What do you think people are actually going to hold their stock to? What I like to say on the live streams is that I think $5,000 or $10,000 is reasonable. I think your average person with 100 shares or 120 shares, last time we got the count, I'm sure it's a lot higher than that now, would be able to hold to at least $5,000 per share. That's $500,000. If they held to 10,000, that's over $1 million. So I think that is more reasonable, because it all comes down to that psychological effect. If you watch your position go from let's say you bought 25 shares at 100 or 102 shares, 100 shares, whatever, at $25. That's only $2,500. That just turned into $500,000. People are tempted when you see these gains to sell out of them. It's a lot easier to hold a stock that is down that is up. So I think 5,000 is more on the reasonable side comparatively to a lot of people that want the stock to go to 500,000 or these other prices. I think that's very reasonable. 10,000 also could be very reasonable. Higher than that, I'm not convinced that people would actually hold on. And when I say people, you would need like 98% of people to hold on to their stock. at these key, like 50, 50,000, 100,000. I don't think that would happen. So that's my take on this. 5, 10,000, that's reasonable, and that's what I've stuck by, and that's what I've said this whole entire time. And like I said, as far as when this could possibly happen, as soon as earnings and bad guidance come, could be as soon as January 27th, because obviously if fucking Apple went down 10%, your index is going to get clapped. Clippity clapped. You're going to see a tough time. You're going to see a bad day. As far as the latest, I would imagine, would be the end of 2022, because people are not going to have that much money. Revenue, earnings would definitely be down substantially. That's a fact. End of 2022, you're going to see a lack of liquidity. So that's the time frame. That's how high I think this stock can actually go. As far as how I will actually go about exiting my position, it's pretty straightforward. Let's just use this same analogy. If I had 100 shares for $25, I spent $2,500 to accumulate those shares. If the price of the stock goes to probably $2,500, I would sell one share, get my initial investment back, and hold the rest. And that wasn't just saying I'm going to sell it $2,500 a share. Who knows, $5,000 a share. It doesn't matter. I would just sell one share when it felt like, or a couple shares if you had to, when it felt like, hey, this is good. If I have 100 shares and I could sell 3 or 5 or 1 or 2, whatever the number is, a small number, and get my initial investment back and make this a risk-free trade, that's what I'm going to do. And that's what I think everybody should do if they're in this. And I'm obviously not a financial advisor. I'm not a financial planner. This is obviously not giving you a crystal ball and seeing into the future here. But I think it's pretty damn straightforward. And let me know what you guys think about this down below in the comment section of this video. But that's basically how I would go about all of this. As far as selling the rest of my stock, $5,000, $10,000, that's definitely beyond reasonable. So, I don't know if you guys found value out of this video. Hit the like button for me. Consider subscribing to the channel. Let me know, most importantly, what your opinion is on this down below in the comment section. How high do you think AMC is going to go? When do you think we are going to squeeze? Let me know all of that information, as well as if you guys want access to all of my trades in real time. Link for that is in the pinned comment down below, as well as the links for free stocks, like I said, in the description of this video. So, enjoy your weekend. Love and appreciate you guys. Thanks for watching. I will see you in the next one.